right, good day traders. Today we're going to take a look at the dollar index, the King Dollar, or DX on most platforms. You can also look at UUP, the ETF that tracks the dollar. And it's no secret that the dollar has been severely beaten down, especially after we took out these multi-week lows here, right around here in mid to late November. Once we cleared this support level, we retested a couple times, and we've been talking about a potential move or retest down to the next level, which came in at 90 cents. Well, how did we get to this level, or where was this level derived from? It simply just comes from an area of weekly structure. This is a very key area that we've had drawn on our charts for some time, and it doesn't really just go back here to these lows where we ended up breaking out in 2018. You can also look at it here on a monthly and dial back, and you can see that we basically have multiple touch points here going all the way back to 96. This whole area is a huge area. So we've got touches here in 96, sticky action here in 04, 06. That area served as resistance in 08 and then 2010, and then served as support back here in 2017 area. So now that we've come back down to this level, we've come down, we have some classic divergence going on. This low followed by a lower low, followed by this low and a higher low down here on the RSI. And we're also getting that coupled with a trend line break. Now, we do have a lot of curveballs, if you will, right now in the markets pertaining to dollar itself, the economy, Eurozone, UK news around Brexit. So we do want to be cautious trading currencies, especially around the holidays, where we have in the past seen some pretty wild and chaotic moves when some of the liquidity and volume dry up. But with that being said, we've also seen some of our really high probability setups around this particular time period. Just want to show you from a seasonal standpoint as well. As we come into January, usually December is weak for the dollar, which we've clearly seen on the chart. But as we head into January, January is a historically bullish month for the greenback. So here we are on a 35-year seasonality chart going back from 85 to 2019. And this is the start of January right in here. And you can see all the way through February, March, we tend to trade to the upside. It's not as clean, not a straight up move. Clearly see some pullbacks here along the way, but the trend is up for the first couple of months or first quarter of the year for the US dollar. So we think some low risk plays, we think the risk versus reward is certainly favorable in this case. By establishing a long position, assuming we maintain above the trend line today, we had a pretty nasty reversal yesterday, but now we're trading back off that trend line. So we're looking for longs around here. First targets are going to be up here at the 92.50 level. First targets are going to be 92.50 level, and we can just tuck our risk down here below 89.5, anywhere below 90, 89.5, depending on your risk tolerance. That's what we'll be looking for on the US dollar. You can trade the DX dollar futures that trade on the ICE exchange, or you can trade UUP or other leveraged ETFs. So that's what we're looking at in today's markets. Stay safe out there. Happy holidays to everybody that's celebrating, and we'll see you on the next update.